one of the things that I'm going to be showing today to you is going to be about my own trading activity that I take for every single week. I know the market is open 24/5, which means Monday to Friday. So the way I trade is rather different. For your information, just last month alone, the people who participated in our webinars, we have received comments that I won't really give the exact names, but there are so far 50 plus people commented that they have made 5-6 digit income from FX trading last month. And one thing that I want to emphasize again, that nothing on A to Z Forex is for sale. So this means everything that we do is completely free of charge, and we will not charge any online content for a fee to you guys. And that's because we ourselves end up making money when we are trading. That's at the end what trader means, right? But what does a trader do over a weekend? That's indeed the question for today. What makes me different than you, or what makes me different than the rest of the people, that I end up making 92% of my entries in profit, 8% in loss, or just break even? And every single month, pretty much, I have, if I look into the market, I have around 60 entries, and out of the 60, at least 50 of them will be in profit, just to put it into perspective for you. I've put here on my trading journal 2 of the entries from last week. So the main thing for me that I do every week is keeping a journal. That's something that I will stick to it, and I will go religiously without really thinking anything against it. And the way I look at the market is, this is the thing that you see before I make an entry. And I have also a notebook, which is a paper thing, that I keep a journal as well there. But that journal is about my exits. So every entry that I have has an online logbook just like this one. And every entry that I have as well has a logbook too when I exited. Unfortunately, I can't really show my exit logbook for you right now because I haven't really scanned or taken a picture of it. However, if you look at it, it's going to be very simple. But the difference is that I don't really mention the levels, like how many pips, etc. I just keep a bare note for myself. Why did that position end up with a loss or a profit? So let's start with my trading week. What do I really do every single week? And I'll share a small background of myself. I come from not a very rich family. I did not really spend my time or my life in a luxury. So that made me who I am today, because everything that I did, I was telling myself that I'm going to be different. I'm not going to end up in a poverty. I will not end up like my neighbors. And in 2005, I got an opportunity to study in the US. Just before going to the US, I heard about Forex. And lucky me, when I was in the US, I met with one of the investor bankers in there, who told me some tips and tricks about Forex market, especially the moving averages. And he told me some tricks about the Fibonacci as well, which I've later on mastered myself and created real Fibonacci waves theory, which is making me different than the rest. But the main thing is not about the knowledge or anything else that I have, but mostly about the psychology that I'm holding on to. So the first thing first, for me, the market starts when the market really starts. As soon as the market is opening over Sunday, I live in Amsterdam right now, I will open my chart and I will just look into the market, whether or not there is a gap. How long or how big is the gap from the Friday market closing, and whether or not it has an impact on the long-term trend. So that's the very first thing that I do. That does not mean that I will open a position. So this is my Sunday night. Meanwhile, my Monday trading will not start at least until 9 o'clock Amsterdam time, which makes 8 o'clock London time, AM on Monday. So until then, I will not open any position at all. That's just religious. I will not go against it. I've done it a couple of times that I've gone against my rule, and one of the positions that I have had has made me, well, close to 6-digit profit, but also quite a few of them has cost me 6-digit loss as well in total in the last 10 years of my operations. So that's indeed the reason why I do not like trading between the market opening and until the London opening for the first trading day of the week. So once I have the trading week opened, I will trade only between the London market opening until basically 6, latest 8 p.m. Amsterdam time, which is 7 p.m. London time, every day except Friday. For Friday, my day is over at 6 p.m. Amsterdam time, which is 5 p.m. London time. So the market, and I'm not doing anything different. We'll go through together, by the way, market analysis for the coming week together. But I want you to understand things. So 6 p.m. Amsterdam time, I'm off the market. I'm looking for a new trading week, and I go back to my family and I start my weekend. Meanwhile, Saturday, I'm back in the market in the afternoon. I've shared the exact times on A to Z Forex over here that you can really go and start practicing or going through my my trading days. But Sunday, basically, like today, I will always be back in the market and looking into trade opportunities. But let's go through the Saturday. What do I do? Saturdays are for me to look into back and learn from my mistakes. At the end, I'm not a superhuman. I'm not a super trader, although I've been referred as the best trader of here a couple of times. I'm a normal person just like you are. So I make mistakes, and it's pretty much one every week that I have one mistake every week, and I'm after that mistake. So what I'll do is that I will go through every single position that I have had, whether it's profit or loss. It doesn't really matter what it is. It doesn't really matter how much monetary gain or monetary loss it has made for me. I will just go into market and try to understand that. So as an example, we have 2 positions that I'm sharing today with you that I took myself this week. One was gold. Basically, for gold, by the way, my trade size here, it is not number of lots, it is dollar value per entry. Just to make it easy for my profit loss calculation over here. Or by the way, it's supposed to be the dollar sign here. So for gold, I took a position of a buy order, and I said that the pair has a resistance at 1264. A break above will happen if the price breaks above the 20-hour SMA, and then bounce is confirmed if 100 SMA is broken as well. 9th of June, 4:40 p.m. So this is the market that we are looking into. We have the 20 moving average, we have the 100 moving average, and I have basically my market entries over here. According to my strategy that I always share with you guys is the fact that if both of my moving averages are showing up, I'm not supposed to be selling. Indeed, I'm supposed to be looking for long opportunities. So whenever that happens, I will go and buy. So the market touched before that, by the way, I also had another position which was a buy order from 1246 to 1262. Basically, I bought from here. 44 is somewhere over here, basically. I had a pending buy stop order. I think it's somewhere here. And my exit was 1262. So I have exited it somewhere over here. So I already took one wave into account, and basically, according to my price action, once you have entered and closed your position, next time what's supposed to be happening is the fact that the market is going to touch your 20-hour moving average and then bounce upwards again. So this is exactly what I did with the next gold entry too. So the market went down, touched the 20 moving average, a little broke below it, some 45 pips. And the next thing that I was looking for was actually a break above the main choppy level that I was looking for, basically 1264. And above the 1264, I entered the market at 1266. So I explained myself why I have done it. And on my notepad as well, I have written down why I have exited the position. So if you happen to see my own logbook, I will basically say that, or I have actually said that the market went up and found itself a resistance, which can be seen on 15-minute time frame. I basically, because it was Friday, I had to exit the position. I don't really like to keep my positions open over the weekend. So I looked into market on 15-minute time frame as well to see what really is happening as this took place, this major candle. And when I combined these two candles to each other, I had a crazy pin bar for me. If you remember my candlestick analysis, I call that these two candles together a sword candle, which is a reversal. So I have written down that there is a sword candle occurring on a 15-minute time frame. That's indeed the reason why I've exited the market at that level. So we are done with this position. The next position that I've had last week was Friday, and that was again sell position, one lot on euro dollar, where I sold at 113.11. Now let's look into that as well, see why I really did it. This is the last trading day. Explanation: the pair has broken below the 100 SMA and 100% Fibonacci retracement zone. So I basically explained myself that the pair is basically breaking below everything, and I have the level 113.11. So we have this green or blue moving average, which is below it. I didn't catch the position to enter when it was breaking below. So the next thing what I will do, or what I did, was looking into the market to test the 20 moving average, as we have done also on gold, and to enter a position with it. So 113.11, the market touches it, and we enter a short position with it. What do I have over there? My take profit and support resistance level. I basically have 35 pips of stop loss and 54 pips of take profit. And that's exactly what we have done. So 113.11, 54 pips. We have this reversal or support line over here, which, by the way, I have defined according to the level over here, because there was a massive support line you can see at this level. So I basically wanted to exit the market before I get into any trouble. So I exited it a little earlier, and at the end we ended up in profit. So this is what I would do, or what I have done yesterday on Saturday. The next thing is Sunday. What do I do? So on Sunday, I will go into the market and I will look into the weekly time frame, top to bottom analysis. What is really happening in the market? What can I do in order to take advantage of it? By the way, you can even see right now I have another sell stop order for euro dollar at this level, which has been pending there for quite a while for now. So looking into the market on Sundays, I try to define the levels where I would be entering into market. And this way, I've prepared myself already for Monday, Tuesday, Wednesday, Friday, etc. by the way, I also quite often avoid trading on Fridays because most of my losses personally have occurred on Fridays. That's indeed, I call it Friday, like frying something, you know. That's well, I end up most of the time making the biggest losses of mine, and this is most not because of my strategy not working. It's mostly because of the fact that I'm psychologically too much relaxed that tomorrow, every Saturday, I'm doing something different, something fun. So I'm psychologically very relaxed, and I'm expecting that Saturday thing already to happen. So it also has a negative impact on my operation. That's indeed the reason why I try to avoid Friday trading. Let me see if you have any question right now. Yagup, do you add to your positions? Sometimes I do add to my positions, but it's only if I haven't exited the position. Like if I would have entered the position for euro dollar as an example, when it broke below the 100 moving average, somewhere over here, that if I would have entered, I would definitely have added more onto it with 1.1311 level, but I missed that opportunity, so I couldn't really do it. So it was a great opportunity, by the way. Now let's look into the market as if I'm preparing myself for the next week. Indeed, I haven't analyzed the market yet because I wanted to prepare myself with you for the coming week. What can we really expect from the market? The very first thing that I have already done is to define which day is going to be the most important for me from fundamentals perspective. So the very first thing that I came up with, or I stumbled upon, is the FOMC press conference, which is on Wednesday. So it's extremely important for me to understand that the statement is going to be coming 30 minutes before the press conference. And what do we know about the FOMC is the fact that everyone is thinking about that rate hike, whether or not the Fed would be hiking the rate, whether or not the Fed would be talking about the Brexit, whether or not the Fed is worried about Brexit, and many other commentaries in between as well. One thing also worth mentioning is the fact that the dollar, the US dollar, is not just the national currency of the United States, but moreover, it is an international currency where many countries have reserves in. So it is an IMF reserve currency as well, indeed the biggest one. So what does it tell us? First thing first, since the Brexit voting is going to be on the 23rd of June, I'm not a gambler, but I can even bet that the Fed will not be hiking the interest rate. So for Wednesday, what I will tell for myself on my trading journal is the fact that the dollar is expected to depreciate on Wednesday. Done. End of the line. So the next thing I do is I go back to my trading chart and I look into the market. Where and what can I see on my chart? On daily time frame, we can see that the market is moving on bearish side, while we have had a high over here. We have so far kind of a head and shoulder formation over here. So basically from here to here is 500 pips. Therefore, we can expect 500 pips of depreciation so far. And that basically gives me the belief that even during Monday and Tuesday, if the US dollar is going to be appreciating, the worst that is going to be happening on the euro dollar perspective is going to be limited at 1.0885 level. And that falls pretty much right onto my 10% Fibonacci retracement zone. I know you don't have the 10%, but that's what makes me different than the rest of the market. So we will be looking for another buy limit order from here. Since the market is closed, I can't really place a position. So we will be looking into a buy limit order for that level. So when you go on that level, it will tell you, and it's also important whenever you are putting a trend line or so, write a description. what does that trend line tell you? What can you really be expecting for that trend line? Because otherwise, if you don't write a description, you will not be remembering why you put it there. Did I put it there in order to exit my position? Did I put it there in order to enter a position? So by writing a description, I've already told myself what's going to be happening next as well. So this is first thing first that we have already defined. Second thing, we can see that the market, at least the 100 moving average on daily time frame, is moving on the bullish side, and the 20 moving average is kind of flat right there, while the market, I'm referring to candlestick formations, is just above the 100 line. And last but not least, we have this crazy trend line, which has happened to be a massive support level ever since February. And each time it touched it, we have had a massive correction waves or sideways market developments. So what we can expect is that it is also likely that the pair is going to be touching to 61.8%, which is 1.1146 or 43 level, before we see any kind of retracement. So unless the market breaks also below the 50 level that I have outlined here, 1.1085 level, we can also expect to see a bullish development over here. On hourly time frame, let's see what's going to be really happening. We can see that the MACD is below the zero line, the market is below all these levels, and indeed 61.8% is likely to happen as a major support level, because of the fact that price action told us all the time, where you have a massive large candle like this one over here happening, the beginning and the ending of that candle is likely to become your support resistance level. So indeed, that's one of the main reasons why we could also expect this level to become a reversal level, which we will be expecting to see on Tuesday or Wednesday. So this is for euro dollar. Next thing for gold. Well, one thing that I want to share with you, I do believe that gold is undervalued. I'm very much concerned that the current level of the global economy is leading us towards worse financial crisis than the 2008 one. At the end, 2008 was more like a financial crisis delivered to us by the unregulated real estate market. The 2016 or 17 financial crisis will come to us under the name of unregulated or under-regulated financial markets, where the investment banks as well as central banks has delivered more and more free money for the banks, and free money end up making the existing money in the world get less and less valuable. And what is more valuable than the paper? Of course, gold. That's indeed why the central banks have been trying to eliminate people holding gold bullions. Also look into another part. If the Fed is not going to be able to hike the interest rates, we are also going to be seeing more and more instability in the US economy, US dollar prices. So far, the dollar has been getting valuable or has been appreciating under the term monetary policy divergence. So what does it mean? Monetary policy refers to the monetary policy of a country, a central bank. So far, the Europe has been basically talking about cutting interest rates to negative side, which they have done it so far. And the Fed has been talking about hiking the interest rate. So given the conflict between two sides, or divergence between two sides, the US dollar has been appreciating while the euro has been depreciating. That's so far the scenario which we have been seeing. The next thing that we have in front of us is actually the break point of that monetary policy divergence. That's indeed the reason why I believe that the US dollar will start depreciating, and that will push the gold prices higher. So what next for us, you might be asking. So since we know that on Wednesday the US dollar is most likely to be depreciating, we can expect to find the next support level. So what is the next support level? The next support level is likely to take place in two places that we have. The first one is around 1,257 level, this level over here. And it's also because of the fact that we saw, if you go on hourly time frame, basically this is the level that I'm referring to, the previous support level. And the next one that we can also expect to see is 1238, 1240 level. Also because of the previous large body of the candle over here. So for Wednesday and post Wednesday, we will be expecting a reversal from 1238 or 1257 levels that we would be seeing. My bet or my preference will be look for a reversal from here going back to this level, 1257, and you can see that this is going to be basically like this, the moving average, and then we can see a change in the, let me change this color. You can see that the change is going to be happening in the trend as well. Basically touch the 100 moving average and reverse from there onwards. That's my pure expectation for the coming week. I will of course be waiting for the market and analyzing it on daily basis. At the end, I can't really speculate on the price of the market or the direction of the market just because of my imagination, but it is very much likely to happen. Now, the next question that we have is, what's next? Well, based on my Fibonacci, since the market has already broken above the 88% Fibonacci retracement zone, I know that my next target is standing at 61.8% Fibonacci retracement zone. So I will be expecting the pair or the gold to break above the highest high of the market at 1300 level. And indeed, this week or within the next 10 days, touch the 1341 level. And that's going to be when the fun things are, that's going to be the fun level for us, because we will see the central banks going crazy. We will see the Brexit taking place, at least the voting. We will see the Fed commenting. We will see the ECB commenting, and everything is going to be going crazy during that period, because nothing can really stop gold from appreciating during that period, for the fact there will be instability in the global economy. Now, the next thing that I'm going to be analyzing is, you can see, by the way, this is one of my existing position too. One lot of selling the oil I've placed. So right now this position is around 80 cents or so in profit. So what next for me? So again, we go on the weekly time frame to see what's really happening. We can see this weekly candle that is a sword candle for me, giving me the belief that the market is going to be on the bearish side. We can see the trend reversal, and we can also see that the next support that we have is only standing just a couple of pips from here, basically some 50 cents or less from the lowest low of Friday's candle. But most important of all, the next main candle as a support level is standing at $47.11 level. So what I'm going to be doing is basically looking into the market on 1 hour perspective as well, to see whether or not I should be exiting the market. And I can see that it is indeed best for me to exit the market from as close to 49.15 level as possible. And again, look for another short opportunity from $49.95 level, and with the next target being 47.80 level or even lower. So this is gonna be my crude oil. The next target that the next pair that we are going to be talking about is going to be pound Canadian dollar. And if we look into the pound Canadian dollar, we can see that the pair is under massive downtrend. We can see it immediately over here. And since we have a massive downtrend seenable, according to our price action theory, we cannot enter a position at this level. And we should only be entering a position when the market is touching to 20-hour moving average, or better, to 100 moving average. So let's change this to 100 and this to 20. So you can see the market. So what can we really be expecting from this trend so far? The main thing that, let me actually show you on daily time frame perspective before I go on weekly. The main thing that I want you to see is that the main resistance this pair is going to have is going to be at 1.8326, and the main resistance or support that we have right now is at the lowest low of last week. So indeed, we can see this level as a possible reversal level. And if you see a break above this candle over here is an indication of supply and demand breakout or break even. So if we see a break above 1.8223 level, basically the highest high of this market price plus 2 pips, we are likely to see the pair going to 1.8288 level, and even further to 1.8325, 8330 level. So this is the level that we are going to be looking. And this is so far confirmed mostly on intraday time frame period. Last pair that we're going to be looking into is going to be the USD Japanese yen. On weekly time frame, we have this the previous week's massive candlestick that was bearish, and right after it, the market went into consolidation for the entire week. We are very close to the 200-week moving average as well. I quite often use it on weekly time frame. And if we change this to 100 moving average and put it on daily time frame or hourly time frame, we can see that the market is basically so far tired out. It is out of the momentum. And what does it tell us? At the moment, despite the massive market movement on a bearish side, we know that the Japanese economy or Japanese central bank, Bank of Japan, is not really in favor of strong Japanese yen. So we could possibly see that the market is going to be moving on to bullish side. And that would only be happening if we see a break above the level of 107.40 level. I'm going to be giving a larger level than that. And if we see a break above 107.40 level, the first target that I would be targeting would be 107.80 level. The next target that I will have will be 108.85 level. And finally, the main target that I will have will be at 111.85 level. This is so far it when it comes to weekly market analysis for this week. So coming to questions, one of the questions is from Emmanuel. I love the simple 20 moving average price break. How do you determine your stop loss in this case? Basically, I try to stick towards my 35 to 40 pips stop loss range. But sometimes, of course, it's almost impossible. Let's go back to USD entry since this was made on this position. So whenever I entered to this position, I basically looked into the market. that where is my next resistance level? What would happen to my position? So I can see that the most immediate resistance from the level of 1.1311, basically over here, was at this level. However, as I told you, I try to stick to 35 pips stop loss, and therefore I didn't use the next resistance level over here, but I just used it 35 pips. So this is it. Quite often, what I also do is just using a couple of pips above the 100 moving average as my next stop loss level, just in case if I'm not very happy with 35 pips of stop loss. And you can also see when I exceed 35 pips stop loss, like over here, you can see that gold entry I had 65 pips. In that case, I lowered the lot size by half as well. Since 65 is almost twice as much as 35, I just went for half the lot size that I would have entered otherwise. The next question we have is, how do you know where supply and demand levels are? Well, supply and demand levels are difficult to answer just with comments. You really need to basically get used to it. But let me give you an easy way of following the market. You can see that in every position or every chart that I'm sharing, I have 3 indicators. I don't have anything more than that. The one indicator that I have will be definitely just standard MACD 12.26.9. And the other one is either 20 and 100 moving average or 50 and 200 moving average, depending on the strategy that I'm using. So if both of the moving averages are showing or sloping downwards and my MACD is below the 0 line, I will not trade anything against the trend, and I will follow the market on the bearish side. Just the other way around, if both of my moving averages, such as over here, both of my moving averages are sloping upwards and MACD is above the 0 line, somewhere over here, I will not sell this position, and indeed I will keep on buying it until I see a break below and close below the either 20 moving average or 100 moving average. But over here, one of the things that I would have also done, or I have told most of the people, was also to look into 1.14 level, because it was a major resistance level. And this could have been determined by looking into the history before. I look into the daily time frame, and on daily time frame, I'm trying to find out any candle that looks like a sword. And I just look into like this candle over here. That's indeed the reason why I looked and closed my position at 1.14. So it's pretty simple. You just need to look into moving averages to tell you the direction of the trend. Just follow it with the price action. That's all it is. So today's webinar, as I mentioned earlier, was sponsored by STO, which is an A to Z approved broker. You can see so many brokers being tested by A to Z Forex, and only 2, 4, 6 of them out of so many being A to Z approved, and STO is one of them. So do consider at least testing these accounts. And one thing that's really good for me, for this broker, is the fact that they give better interest rate than my bank. My bank is cutting my interest rate, while STO has a 10% annual interest campaign, where each one of your deposit would get 10% extra on it. Follow us on YouTube. Follow us on different channels that we are present: Facebook, A to Z Forex, A to Z Markets, and come join us wherever we are. Thank you very much, and have a great week ahead.